But here's the catch. Stick around, because at the end I'll tell you the real consequence of this move that Powell definitely doesn't want you thinking about. So the Fed cut rates by a whopping quarter point today. Their key rate dropped from 4.3% to 4.1%. Revolutionary stuff, folks. Chair Jerome Powell says they're suddenly worried about jobs after months of obsessing over inflation like it was their favorite Netflix binge. Now, Powell hinted there could be 2 more cuts this year, but don't pop the champagne yet. Wall Street was betting on 5 cuts, and instead, they got the economic equivalent of a lukewarm seltzer. Here's where it gets spicy. Trump's new appointee Stephen Miron pushed for a bigger half-point cut, but that was too bold for this crowd. Meanwhile, Trump is busy trying to fire Fed Governor Lisa Cook, the first attempted firing in the Fed's 112-year history. Nothing says independent central bank like a president breathing down its neck. And how did Wall Street react? About as excited as getting socks for Christmas. The S&P dropped, the Nasdaq fell, and only the Dow managed to limp up 0.5%. Inspiring, but here's that hidden consequence I promised. Cutting rates now might ease unemployment, sure, but it also risks reigniting inflation just in time for the election cycle. Translation? Your grocery bill could become the real campaign ad this fall. So there you have it. A rate cut that's not quite enough for Wall Street, maybe too much for Main Street, and perfectly timed to make politics even messier.